Financial freedom. This is something that you probably heard a lot about, and you're trying to find ways to actually achieve financial freedom. But there's so much information out there that sometimes it can really become overwhelming for you, and you just find you're not able to actually attain financial freedom. So the question is there simpler ways or steps where you can actually achieve financial freedom without getting overwhelmed? And the good news is that I'm here to share four simple steps that you can start applying from today itself. And if you watch right till the end, I'll actually give you some additional advice around how you can build additional income that'll help you sustain some of these steps as well when it comes to building financial freedom. So let's get started with it. Now, the first step is building an emergency fund. What exactly is an emergency fund? Let's suppose you're someone that works in a full 9 to 5, or you rely on a specific income that comes in regularly. And for some reason, that income is suddenly disrupted, or it's stopped, or you've been laid off from your job, or for some reason you have to leave your job and you don't have additional income that's coming in. An emergency fund is basically a set of money that is set aside where you basically use it for, as the term says, any emergencies. Now, a typical practice that has been advised by a lot of financial freedom enthusiasts is to basically keep 3 to 6 months emergency fund. So let's just say, for example, you're someone that is earning, say, $5,000 a month or whatever income currency it is that you use. And you need to basically have, let's say, 3 months minimum as an emergency fund. So essentially, what you need to do is keep aside $15,000. Now, the key aspect here is that it's an emergency fund. So you only really tap into it when there is something very specific that you need to use the funds for, not for general entertainment expenses, unless obviously you need to get to a point where you need to start spending a little bit on certain things like groceries, etc., which are obviously quite important. But the point here is that you need to have a sort of asset that allows you to tap into it. So if there's cash that's sitting on the side and you know that it's there in case there's any situation where perhaps you lose your job or you lose your full-time income, then at least you know with the safe knowledge that there is something there for you to go into just to pay off important expenses. And I stress on the important expenses part. So it's very important that you build an emergency fund. Now, in some cases, if you're not able to build a certain value in terms of 3 months to 6 months, which is obviously the range a lot of people look at, then what you really want to do is try and see if you can start with an actual amount. And what I suggest is that you actually look at building around $1,000 to start with. And if you can have that at least on the side, then obviously from there you can start building up slowly, even while you have an income. So it is quite important that before you do any kind of investing, you actually put some money aside and create an emergency fund where it's not really easy and accessible to get, but obviously from there you can tap into it whenever you need to. That brings me to the next point, which is about paying off debt. Now, there's a lot of different ways where someone can actually pay off debt, and in my view, there's no sort of right or wrong way, but it's also about looking at what is an effective strategy when it comes to paying off debt. And I think the best strategy that I could sort of mention is something where it revolves around doing it on a step by step basis. And what I mean by that is you look at, for example, your largest debt amount, where you've listed obviously all your different debts that you have as outstanding in terms of balances, and you see which debts obviously are the largest to pay off. Now, the first thing you do is you actually start paying off the first debt itself while also paying minimum amounts on other debts. Reason I say this is because one, you're reducing the interest that you're paying by paying off one particular debt first and getting it out of the way. And secondly, you're also increasing your cash flow. So that means by the additional cash that you've obviously created from the debt that you would have paid off and settled, you'll be able to pay off all your other debts. Of course, the ideal world is that you don't have any debt at all, which means you have some cash to start investing. But reality is people do have certain debts that they've been using. So look at debts that obviously are the largest, but what I'd also suggest is look at the debts where the interest that you pay on those debts is very high, because you want to want to get rid of the high interest based debts, because those are the ones that really drain your cash flow. And if you do that, then essentially over time you're having this dwindling effect or compounding effect, where you're not only reducing the interest that is paid on that debt, but then also settling the debt over time. The next step is basically where you start looking at investing in assets that generate income for you. Now, the key here is assets that work for you. In other words, you're not doing something actively as some kind of work in order to generate that, like you do with a job, but you have perhaps investments in stocks, investments in other types of funds. In some cases, some people like crypto. And in other cases, it might be investing in a business where you know that the business is generating income for you. The same can also go for property, where you invest in property and you may be getting rental income. The idea here is that you want to start building an asset base over time that really starts generating a certain amount of income. Now, the amount of income you want to generate is dependent on a couple of factors. One is of your particular background, then your lifestyle requirements in terms of how much you want to obviously generate. Then it's also looking at the types of returns particular assets will give you. Generally, the stock market has obviously given better historical returns over time. And if you go into your own research, you'll see a comparison of how stock markets over the world have performed over time. I'm not going to go into detail about that, but the idea is with stock market at least that you're investing in something where you can even start with small amounts, and there are platforms that allow you to invest in incremental amounts. If you watch my video here where I mentioned about starting to invest $1,000, I've actually given some suggestions there about how you can invest money in these types of platforms. But the idea is that over time, when you start building what I refer to as your investment egg, you start obviously creating a portfolio that allows you to start generating perspective, that allows you to then start generating income over time, which becomes passive, which means you're not working for it, and hence you're able to generate income, which allows you to achieve financial freedom. And then the last point essentially is where you look at investing in a business. Now, a business can obviously help you generate a lot of income over time because it's something where generally you're putting in resources. It's a system that you can build out where you don't necessarily have to be involved yourself, and there are options for that. If you go down in the comments and the description, you'll see there's even a resource for you that you can look into, which is a free training that helps you show you how to build a business using social media. And by creating income from those kinds of platforms, you can generate additional income, but also you can start paying off your debt. You can obviously start creating further investments where you're investing in other platforms or assets. And thereby, what you're doing is you're creating a cycle where you're rinsing and repeating. So, those are the 4 steps that essentially you can follow very simply to achieve financial freedom. I will stress that obviously it takes dedication and patience and doesn't happen overnight. But if you follow these steps, there's no reason why you can't achieve financial freedom.